Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning, hello and welcome to Bazaar Morning Call. Start of a fresh new trading session. It's Tuesday. We have tariff headlines to go over. We have a very strong statement from India to the US President and the US administration's commentary. And of course, we have more earnings. And we also have Rima with us in the house today. Guys, morning.
Hi, good morning. It's going to be an action-packed Tuesday. But at least the start of the week was good, right? So after 5 weeks of losses yesterday, the bulls completely took charge. The question is, will this, India, US, and the talk, the rhetoric, is that going to hurt sentiment? Because Asia is also holding up okay. Is that going to hurt, or can we continue to march on?
Well, ladies, the one message that we got at the start of Monday is don't bet against India.
I knew he'd
no debt economy. Just take a look at what happened with regard to the bounce back that we saw yesterday, and just take a look at that. Our boys on the screen,
Believe.
I mean, people were talking about them knocking off the runs. They were cruising away with only 3 wickets down. And India, the way we bounced back, the bowlers bending their backs in there. We had a couple of big injuries, but yet the boys came out trumps. And that's telling you, don't bet against my India, because we'll fight back. And how?
Beautifully put, Nigel, and that's indeed the cue with which we are starting.
Goosebumps.
Absolutely, absolutely. Whether it's on the field, whether it's on the border, don't bet against India. And that is what we really start off with as we look at the cues this morning as well. It's images of that beautiful win, in England yesterday. And congratulations to, of course, Team India. But talking about the parallel here when it comes to geopolitics, we've got such a befitting or strong, response coming in from the Indian side, something that we haven't really heard so far. And what I'm talking about is India's response to what Mr. Trump's latest tweet said. He kind of ratcheted up, further rhetoric yesterday. And let's just put this up, this latest threat of increasing tariffs. He went on to his social media platform and he said, India is not only buying massive amounts of Russian oil, they are then, for much of that oil purchase, selling it in the open market for big profits. They don't care how many people in Ukraine are being killed by the Russian war machine. Because of this, I'll be substantially raising the tariff paid by India to the USA. So, big statement, and it got an even bigger response from the Indian side. And this is the first time India has given a very targeted point-by-point response to a lot of the commentary that's coming in. Remember, we did not respond even when this 25% tariff was levied on India, the declaration that happened around the 31st of July and 1st of August. What has the MEA said? The MEA in its response, first of all, calls the US action unjustified and unreasonable. And it then calls out the West specifically for the deals and the business that they are doing with the Russians. Look at what the MEA is saying. MEA is saying the very nations criticizing India are themselves indulging in trade with Russia. And they talk about EU bilateral trade of 65.5 billion just in goods. Services trade is another 17 billion. And they also point out that the EU continues to buy record amounts of LNG from Russia. And then the Ministry of External Affairs goes on to say that US itself is importing uranium hexafluoride for its nuclear industry, palladium for the EV industry, fertilizers as well as chemicals, and then ends with a flourish saying that India, of course, will protect its own national interests. So very strong response coming in, which is why you don't even have a reaction in the oil markets, because technically, India is buying almost a third of its oil requirement from Russia. And ING in that note said that, 1.7 million barrels per day of oil could be at risk if India suddenly stops buying from Russia. But none of this is showing up in the oil markets. The oil market was very, very steady yesterday, very range-bound, just around 69 on Brent. That's the picture even right now on the screen. The oil market is still dealing with the increase in output from OPEC+. India is not a risk factor at all because of the response and the stance that India has been taking. So that's on India, US. Very quickly coming back to now Wall Street. Wall Street had a great start to the week as well. It completely clawed back all the losses from Friday, and the market is squarely focused on now one thing, that is a Fed rate cut, the probability of which for the month of September is well above 80%. Now, that played out in the equity market. You can see 1% to about 2% higher on US equities. That played out in the bond market. The US 10-year yield continued to fall. It fell below 4.2% in the action yesterday. Today morning, it's just at that handle. The dollar has been very, very range-bound after It's 3.5% rise in July. So not too many moves on the dollar as well. For us, of course, we managed to bounce back from oversold levels yesterday. But can the bulls keep clawing their way back? Let's see. Some of the earnings commentary, now that the season is about to wrap up, is not that bad. Q1 perhaps not as bad as what one was initially fearing when you look at the final numbers. And today, of course, banks are going to be in focus. The RBI comes out with its announcement tomorrow. We have a new man taking charge at Indent, and Rima is going to talk about that. But banks will hold the key because yesterday they did not participate. So let's see what the Bank Nifty does today. Rima.
Aye, so let's just quickly take stock of the Asian markets this morning. So broadly started off stronger. Taiwan is up close to about 0.7%. The Korean markets have gained over 1%. Shanghai is also trading with gains of close to about 0.5%. Hang Seng's the only one which is flat, but broadly Asia is higher, tracking Wall Street's overnight rally, where S&P 500 posted its biggest gain since May. But the question is, will the geopolitics that Surbhi was talking about cast a shadow? Will Donald Trump's escalating threat to penalize India rattle sentiment? Because that continues to remain a key overhang for investors. Back home, just to recap yesterday's trading action, it was a strong start to the week. The Nifty closed above 24,700. There was no sign of weakness through the session. Prices showed resilience, and we finally pretty much closed at the day's high. The mid-cap, small-cap momentum remained strong. Banks were the only place where, there was a bit of a disappointment. They stayed range-bound ahead of the RBI policy decision. Key levels to watch on the way down. The recent swing low stands at 24,535. That was the swing low on the 1st of August. On the way up, around 24,900, which is the 50 DEMA for the Nifty. In terms of flows, the DII's net bought 4,400 crore. The FI's net sold 2,500 crore. In terms of stock watch then, big earnings day. Once again, you've got Adani Ports, Bharti Airtel, Britannia, so many others like Exide, Lupin, Prestige Estate. Lots of earnings reaction. So DLF looked good, Siemens looked good, but Aurobindo Pharma was a bit subdued. And then, of course, the big leadership change at Indent Bank, where Rajiv Anand has been appointed as the managing director and CEO. More with Ritu, who was on top of the story and the first to highlight it. We'll get to her. Before now, Nigel, what are you looking at?
Well, when you have a party, everyone enjoys it, right? But the night is really special when you have a better after party. So even though, yesterday's trading session was very, very good, but you like to see some follow through. So after the kind of bounce that we saw yesterday, the follow-through is going to be most crucial. And yesterday, yes, the Nifty ended higher. The problem is that, in fact, the Nifty Bank didn't participate. But we had made this point yesterday that the Nifty IT valuations in comparison to the NASDAQ, well, it's at a sharp discount. It's at around 20% odd. And in the premium in comparison to the Nifty, valuations are at around 15%. That as well at the lower end of the band. And in yesterday's trade, the IT index was the big outperformer, up close to around 1.5%. Now, yesterday, yes, we saw a bounce, and that's good news. But the bounce came on very, very low volumes. In fact, the volumes were the lowest that we have seen all the way since the 7th of July. So you just take a look at, at the averages that we saw. In yesterday's trading session, that's the number that we're looking at. That's the volume number, much lower than the averages that we have seen in the past. So the bounce came on low volumes. There was a bit of a short covering bounce as well that played out on the Nifty. We did see the Nifty that, in fact, there were some shorts that covered. So for the markets on the whole, there was a bit of a short covering bounce that did play out. Moving to the options data then, in yesterday's trade, you had the call writers that were having a gala time. They got stumped on the wrong side. So 24,700, 24,800 call. Both of them, big unwinding is what we saw there. The call writers got stuck on the wrong side, where you're seeing a mix of activity at around this 24,600 odd mark, which brings us to the levels. The recent low, that's going to be important. So that's the mark that you're looking at. You have resistance that comes in this vicinity of around 24,850 to around 25,000 odd. Yesterday was an inside day, because the high was lower than the previous trading session and the low was higher than the previous trading session as well. So, we were in a bit of a band out there. Yesterday's high was a little lower than the previous sessions, while the low, you did have a little bit of a high. So yesterday was a bit of an inside day. Moving to the Nifty Bank, it didn't perform yesterday, continues to face resistance at around the 20 as well as the 50 DMA. So that's going to be an important mark. And everyone's been talking about, right, the Indian markets have been underperforming, and valuation-wise, we're still very expensive. So you look at the last 1 year or so, the Indian markets actually have underperformed while the emerging markets have done well. And post this underperformance, actually valuations have become a little bit more palatable, because normally the Indian markets trade at a premium in comparison to emerging markets. That's come down to around 66%. Normally, it's much higher. So valuations a little bit more palatable in comparison to the emerging markets. And finally, since we have underperformed in the recent past, Well, the weightage on in terms of market capitalization on the global front as well has come down a little bit. The short point is, yesterday we saw a good bounce. You like to see some follow through. 24,850, that's a crucial mark. The bulls will want to get past that mark.
Okay, absolutely. Nigel, take that point. And Rima, on what you were saying on whether it'll cast a shadow. I mean, if you look at just the square numbers, and the numbers are not too big.
Not too big, yeah.
Impact on GDP, all our US exports, is just about 2.1%. On sentiment and the second order impact, right? That's what we were discussing with a couple of the companies as well, whether there will be a second order implication on this. Maybe yes.
You're seeing it in the rupee, right? From the start of the year, the rupee has depreciated by, I think, about 1.5%, while most of the other emerging market Asian currencies have actually appreciated. So there is a little bit of a it's an overhang. Let's put it like
but from a market perspective, unless something really happens on pharma next, from a market capitalization perspective, sectors like textiles, gems and jewelry, not very big constituents of the market. So let's see if we get some more good news on earnings and maybe some of the flows improve. Things could get better from here on. Let's then move on and bring you the equity call of the morning. Surendra Goyal of Citi says, headline trends in the first quarter are modestly ahead of expectations. Exactly the point that I was saying. Commentary on earnings seems to be improving. Now, he says EBITDA is up 7% YOY. However, adds that Citi's forward estimates have seen continued downgrades, with FY26 EPS down 1% since the start of the quarter. He says while absolute valuations remain high in historical context, relative valuations are reasonable. He says improvement in earnings outlook on the back of cumulative policy actions, low inflation, and stable macro fundamentals is key. Surendra adds that their June 2026 Nifty target is at 26,700. So just like Motilal Oswal, we heard them lower their EPS estimates by only 1%, ditto for Citi, at the end of Q1.
Even the S&P 500 has been smashing earnings expectations. There was a Bloomberg analysis. 82% of the companies have reported earnings above estimates so far, representing the best beat rate since 2021. So that's...
but how we are poised very interestingly, because going forward, a lot of people are expecting weakness in the second half in the US in terms of economy and strength in India in the second half as the monetary policy, rate cuts, etc., they kick in. So let's see. I mean, very interesting, pivot perhaps that these markets are at. Let's discuss this and more with our first guest on the show. Stephen Englander, Managing Editor, Global Head of G10 FX Research, is with us. Stephen, thank you very much for joining in. You've been, of course, watching global markets very, very carefully. And we want to start right there. The point that I was just discussing with my colleague, that as you look forward the second half of the calendar year, or the second half of the fiscal year, expectations are that data in the US may not be as strong as it has been. But it's the polar opposite for us here in India, where everyone's expecting a pickup in earnings and growth in consumption in the second half. How do you look at the US picture to begin with?
Well, it's clear that the recent labor data suggests that the economy is slowing. I don't think it's falling off a cliff. It's been slowing for a while. It'll continue to slow. It looks as if productivity growth is probably high because we're seeing not too many jobs getting created, but we are seeing profits being pretty strong. So that's a good long-term sign. But I would say, setting India aside and its growth prospects, for most of the world, we think 2025 growth was actually front-loaded because everybody was exporting to the US to get in under the tariff wall. And now that the tariffs are raised to the levels that have been proposed, we expect that the trade will slow and the exports will slow. So we it's not super bearish. We just don't have a H2 view that's very dynamic for the world right now.
Stephen, I know it's tough to predict the second half of the year. You called it dynamic, but which way would you swing? Do you think as these tariffs take effect, and they're going to settle significantly higher than what they were ever before, 6-7 times higher, even if you assume a 15-20 times as an average, is that going to end the bull run in the US market? Or do you think, there is enough firepower in the US economy to weather it? I mean, which way would you swing on the US markets and in the economy?
Well, on the economy, we think it is slowing, but we're going to have a pretty good productivity number for Q2 that's coming out tomorrow or the day after. Earnings so far look very good. In the past, what you found is that when earnings are good, and productivity is strong, it pulls up everything. So, it's not going to be a 3% economy, but we do think that we're going, we don't think we're going to go into a recession or anything. And then we'll have some fiscal stimulus, so it might add a little bit in the near term.
Hi, Stephen. Good morning. Good to see you. When, we had some weak data coming out of the United States. And sometimes equity market participants, they like that because it gives you some reason to hope that the Fed now will have to go ahead and, step on the pedal. Do you think that's likely to be the case? 2 more rate cuts coming in for the Fed in this year? Or do you think we should be satisfied with maybe 1 or maybe not?
Well, I mean, we have 1, but we're open to the possibility of 2. I mean, and we've been discussing the possibility of doing 50 in September even. Look, I think the Fed is very pragmatic. I mean, despite the issues with Trump, if the data are clearly suggesting the thing, we've been expecting them to cut in September. We always thought that the market was a little bit pessimistic on the short term. Where we do worry is, we don't see continuous cuts as is priced into the Fed funds future curve or the SOFR curve. We think that they'll do, 1 or 2 and then stop, which would mean, I think, that we could go back, at least for a while, to dollar strengthening. For now, we see dollar weakness, but once these cuts are passed, we think that the dollar could rebound.
Okay, so let's see when the cuts start coming in and how the market then reacts to it. Stephen, on this India-US, I don't know if you heard a little bit of our earlier conversation. Do you think foreign investors who are looking at the Indian market will take note of what's happening in terms of geopolitics, just politics, purely politics, with respect to trade, our equation with Russia? Will it have any bearing, is what I'm asking, when people are looking at allocations to India?
I would guess not in the long term. You look at all the issues that have come up. I mean, the U.S. has had a terrible week with Brazil last week, but now Brazil is rallying. There seems to be an intention to get a deal and to pressure other countries to come up with a deal. It's a process. It seems most of the time that you end up with a deal and markets rally. That was the story. The story of April was everybody was afraid that there would be no deal. May, June, we began to think that there would be a deal. Markets rallied. And I think that that's going to continue to be the case. There's no upside to the U.S. for not getting deals.
So, Stephen, which would be your top bets in equity markets?
Ooh, I mean, we're not a big equity house, but for now, I can talk about the currencies. We don't think the dollar is going to bounce back, until the Fed is done with its rate cuts. But we do have we do think that there will be dollar strength. I mean, towards the end of the year, I think that the weakness we're seeing now is temporary.
So what are the levels you're working with then in terms of the dollar index? Because from an emerging market standpoint, that's one of the key monitorables for us. And, when President Trump took over, it went dancing away to around 111. And from there, it's lost its way. So if you're seeing some strength, next 6 months or towards the end of this calendar year, where should the dollar index hover around?
Well, I think you should think about a move of maybe 4 or 5%, not more. I don't think that. I mean, there are forces in both directions for the dollar, and I think that that's going to prevent it from making a really big move. I think then, once you get it into the middle of 2026, we could see another episode of dollar weakness. But I think that for say we're talking about the end of this year and into next year, I think it's going to be a strong dollar period, but not super strong.
Okay, all right. We will keep that in mind. Stephen, thanks very much. Good conversation. Appreciate you joining us. You have a good rest of the day. Well, that's a view coming in from Stancy. Let's quickly tell you what else we've lined up for you on the show today. Coming up at 8:35, we'll have the management of Sarda Energy and Minerals joining in to talk about the company's Q1 performance and the outlook ahead. At 9 a.m., Abizar Divanji of Neostrat Advisors joins in. He talks about the big change at Indent Bank. Former Axis Bank, honcho, Rajiv Anand moves to Indent Bank. So what are the takeaways and what ahead now for Indent Bank. We'll discuss that. At 9:20, Sameer Arora joins in. He's our market master of the day. At around 9:30 a.m., we get chatting with the management of Shree Cements. They'll talk about their first quarter performance, that volume miss, and the outlook for the rest of the year. After that, we will have Abhijit Das of the International Trade Expert, who will be chatting with us at 9:45 a.m., talking about the latest threats that we're getting in from the US president with respect to purchase of Russian oil. And towards the end of the show, in our special segment, it's the economy. Lata today discusses the economy, the prospects, the RBI outlook with Goldman Sachs economist Santanu Sengupta and B. Prasanna of ICICI Bank. Okay, quick break on that note. We'll come back with a list of top 10 stocks to watch in just a bit.
Welcome back. It's a Tuesday morning. Let's drill it down then to the top stocks that you need to have on your radar this morning. Our research team is standing by with CNBC-TV18 list of top stocks for the day. And first up is going to be Indent Bank. Gaurav.
Well, yes, CNBC-TV18 News Break has been confirmed because now RBI has approved appointment of Mr. Rajiv Anand as MD and CEO for Indent Bank. Now, this is a big move. Let's not forget that this all started on 29th of April when Mr. Katpalia resigned from the position of MD and CEO of Indent Bank. When we look at this appointment, they have appointed him for the next 3 years and he will be taking over from 25th of August. Remember, we were the first one to indicate that he is one of the front-running candidates for Indent Bank's MD and CEO position on June 27th. When we look at his portfolio and his performance, it has been very strong. He has over 35 years of experience. He was one of the founding MD and CEO of Axis Asset Management, and he was also appointed as Deputy Managing Director at Axis Bank in December 2021, where he headed wholesale banking and he was also responsible for driving digital agenda for the bank. When we look at the strong track record, it actually keeps him as one of the very key candidates for Indent Bank, and this can actually move the stock up because this is sentimentally positive. Although when we look at the performance and the way going ahead, it will be really interesting to see how the path towards 1% ROE will be achieved by the bank. But as of now, sentimentally positive news, and for this, I'm keeping Indent Bank in green today.
Okay, all right. Thanks a lot for that, Gaurav. Well, let's hop across to Ekta. She's here to talk about Ouromira.
Well, yes, for Ouromira, in fact, it was a little bit of a disappointing quarter. It missed estimates. The revenue was up around 4% this quarter. The margins came in at around 20.4% versus estimates of around 21.1%, and the profit was below estimates as well. The US revenue was the key culprit, so it came in at around $408 million versus $470 million Q on Q. And Europe, however, did well. It was up 18%. Growth markets were okay, so they were up around 8.8%, and the ARV business, which is the antiretroviral business, was up around 55% year on year. But the key reason for the sluggishness was lower Revlimid sales, and that reflected in the US business, and that's the reason why the entire set of numbers were lower than estimates. The call is at 8:30 a.m. this morning, so more details then.
Okay, all right. We'll keep that in mind. Ekta, thanks very much. Let's go to Sudarshan. He's watching out for a couple of auto component names. Yesterday, Sud spoke to us about Hero Moto. Hero Moto became the stock of the day. What about Sona and Bosch this morning? Sud?
So I'm going with green. For Sona BLW, it's mild green. And as far as Bosch is concerned, there I'm going with green. For Sona BLW, earnings have slipped year on year, but those numbers are largely in line if you compare against muted expectations. Revenue was down 4%, EBITDA too has slipped 17%, and margin has fallen to 24% from the level of 28%. So why there was a fall of almost 17%, almost 4% in the revenue? So company is saying that revenue deferral has been seen from an European EV customer. Also, a key global EV customer saw weaker sales due to demand softness. Also, because of rare earth supply disruption, revenue was impacted even due to US tariff uncertainty. But outlook is positive. Company is saying that BEV revenues are set to improve going ahead. Also, there is a strong launch pipeline over FY26-28, and share of Asia to total revenue is expected to improve to 50% from 45%. Now, Bosch earnings are slightly better than estimates. Revenue was up 11%, EBITDA has increased by 22%, and margin too has come in higher, about 13% against 12.1%. And the biggest segment, that is the mobility business, revenue was higher 14% year-on-year.
Got it. All right, sir. Thanks a lot for that. Let's hop across to Vama. She's here to tell us about Siemens Energy. Morning, Vama.
Well, good morning, Nigel. You know, this is the company that was demerged from Siemens and now houses the energy business. A good set of numbers coming in from the company. Revenue saw an uptick of almost 20% on a year-on-year basis. Apart from that, when you look at the operational performance, that was also very strong. You know, EBITDA margin has expanded by around 470 basis points to 19.1%. The net profit is also up almost 80% on a year-on-year basis. Now, let's look at how the different segments perform. They have two segments, power transmission as well as power generation. The power transmission segment is the segment that is leading the growth this time around. It's up almost 35% on a year-on-year basis. Even when you look at the margins, it is the power transmission business that is driving the margins higher. This particular segment saw an improvement of almost 850 basis points on a year-on-year basis. The ordering activity was extremely robust. The new orders that came in stood at 3,290 crores. This is an uptick of almost 94% on a year-on-year basis, and this uptick was largely driven by large orders received. Apart from that, the company has also announced a capex plan. They're looking to invest around 280 crores in a phased manner in manufacturing capacity expansion of high voltage switchgear products at their Aurangabad facility. So therefore, a good set of numbers. Capex plans coming in for Siemens Energy, going with the green for this counter.
Thank you very much for that. The stock had made its debut in the middle of June at a price of about 28.50. It had listed on NSE and BSE, and since then it's had a pretty good run. Manglam is now joining in to tell us about the numbers from Kansai and Godfrey Phillips.
Well, if you look at Kansai and Interact numbers, they're soft, but the street was expecting, soft numbers given the current conditions. And now everyone believes that maybe the sector is looking up from here on itself. So the revenue is up 1.4%, no great shakes out there. The EBITDA down 8%, and the net profit saw a decline of almost 4%. So it's coming at around 215 crores versus 225 crores. The company saw mid-single digit growth in project business, which means that retail sales are still muted. And the new product contribution is the one that did well for them, over 10% of their sales. Sluggish demand environment for auto paints as well, which is a large part of their overall revenue. Stock ended lower. The market is weak. So as a result of which, we expected to see mild red. But going forward, maybe there could be some recovery, given the street believes the worst is behind. No problems for Godfrey Phillips. Smoking hot numbers coming in, especially on the revenue front. 38% growth in the company's revenue. 1,486 crores versus 1,079 crores. Yes, the EBITDA did not grow as fast as the revenue, but that's something that we saw in ITC as well. Leaf tobacco inflation has caused the margins to compress by about 230 basis points. But a strong revenue growth has ensured that the net profit grows at around 25%, even if there is a margin compression. So see some green on Godfrey Phillips. Additionally, the company has announced a 2:1 bonus, so shareholders would be happy.
Yeah, the cigarette makers have been doing well this quarter, ITC included. Take that point, Manglam. Thanks very much for that. Let's quickly move on. We have Sonel joining in on DLF. How are the numbers, Sonel?
Well, good set of numbers this time around. In fact, bookings, they were up 78% on a YOY basis to come in at 11,425 crore rupees, which was led by their new launch, which is Privana, which itself took around 11,000 crore rupees this quarter, of around 4.7 million square feet in terms of volumes being sold. Company has already achieved more than 50% of its full year guidance of 22,000 crore rupees in quarter one itself. So clearly it looks like they could beat it in the coming quarters. Customer collections, however, were down 6% on a YOY basis. Even in their leasing business, their EBITDA was up 14% to come in at 1,356 crore rupees, going with green on DLF today.
Okay, all right. Thanks for that. But there's going to be a large trade that we're looking forward to. Vivek joins us to tell us about Paytm. Vivek?
Well, that's right. So Paytm will be in focus. Expect a large block deal over here. Remember, Antfin, that held close to 27% stake at the time of the IPO, has consistently been pairing stake, the recent being May 2025. Today, we are expecting Antfin, that is the entity under which this particular stake is held, to exit close to 5.84% stake in the company. The floor price for this particular block deal is at a discount at 1,020 rupees a share. The total size of the block will be close to 3,800 crore rupees, and it is a clean out trade as far as Antfin is concerned. So it will be interesting to see whether the stock recovers after this particular block deal, given the fact that the overhang of any stake sale from Antfin now goes away after this particular block takes place.
Thank you very much for that. So this will be the clean out trade. And as Vivek said, will there be some sort of an overhang lifted? Manglam is back with us. United Spirits came out with their pre-quarter sales numbers.
Yeah, it's interesting, towards the end of the quarter, they're coming out with their pre-quarter update. The timing is odd, but the numbers not. In fact, if you look at the overall sales, they've grown at around 9.4% for the company, a little over 3,020 crores. It's been led by Prestige and Above, which is up around 9% in terms of sales. But Popular also has grown about 13.6%. Remember, this comes on a high base. Same time last year, the company had increased their supply in anticipation of the general elections. But at the same time, this time there are the tailwinds coming in from favorable policies in Telangana and Andhra as well. The company says that the demand environment remains muted, but they've sustained growth momentum. So see some green on United Spirits.
Okay, all right. So some green perhaps on United Spirits. Got that. Cigarette makers doing well, spirits makers doing well, Manglam sectors. Okay. We'll quickly recap our list of top stocks to watch this morning. The ones that have positive news flow around them would be, of course, Indent Bank, Sona, BLW, Bosch, United Spirits, Siemens Energy, and DLF. Stocks with negative news flow around them would be Aurobindo Pharma, Kansai Nerolac, Godfrey Phillips because of the margin issue, and Paytm. All right, that's our stock list for the morning. Let's figure out what's happening in the world of commodities. We have Manisha joining in with the latest. Manisha, lots of big diplomatic and political headlines, India, US and oil. But it's not at least moving the oil market, so that's the good news.
Well, yes, but it could, depending on what really transpires or conspires going forward in the next week or 10 days there. As of now, the crude oil prices have seen a constant decline for a fourth straight day today. Well, OPEC Plus looking to raise output to complete the phased reversal of voluntary cuts that they made back in 2023 really seems to be weighing onto the markets because OPEC is looking to increase production by more than 500,000 barrels per day until the month of September. So that's a lot of crude coming into the markets, and OPEC does want to get its market share back in case there is a sanction on Russia. But if that happens, then you're looking at the crude oil prices really surging. Most of the banks and brokerages tell us that in an event of very strong sanctions, if India and China are not allowed to buy crude, then you could be looking at crude prices really going very volatile. At this point in time, though, with everything going fine, markets do believe that by the fourth quarter, the Brent could be averaging at 60 or sub-60 as well because of the kind of increase in supplies that we are looking at. But much would really depend on how the geopolitical goes and whether or not we do see those secondary sanctions on countries buying Russian crude. In the other metals, we've seen copper prices see some more profit taking, but other metals like ferrous have continued to gain for a second straight day. You saw steel prices gain up by 1%. Iron ore is up 1.5%, back above that $100 a ton. The weakness in US dollar index, expectation of a rate cut in the month of September, and slightly better data coming in from China are some of the supportive factors for metals.
Okay, all right. Thanks a lot, Manisha, for joining and giving us that update. For the time being, we'll slip into a short break. On the other side, Mayuresh Joshi is waiting for us. He'll give us some fundamental stock talk. We'll also be joined by the management of Sarda Energy and Minerals. They reported their Q1 numbers. The street loved it. The stock was up 20%. We'll find out more from Mr. PK Jain. Welcome back to Bazaar Morning Call. As promised, let's focus on Sarda Energy and Minerals. This is the first corporate on our radar. The company reported a stellar first quarter. Profits, EBITDA jumped up. They had, the new acquisition that came into their fold as well. And the street liked it very, very much. Well, to help us out with the past quarter's numbers and the way ahead, we're joined by Mr. PK Jain, the Director and Group CFO at Sarda Energy. Hi, Mr. Jain. Good morning. Congratulations. You have delivered numbers. Yeah, very good. The street loved it.
Thank you, Nigel.
All right. Good to see you, and sir. Now give us a few pointers. You have done more than 600 crores of an EBITDA because SKS has come into your fold now. And you're more a power company than a metal and mining company. And the street believes that seasonality has got taken care of a little bit because now close to 70% of your EBITDA is coming in from the power division. That said, since you have done 600 crores in the first quarter, on an annualized basis, should you be working with an EBITDA number of ballpark close to around 2,000 crores?
should be somewhere around that.
So you
Plus
can
minus,
maintain.
definitely.
Yeah, go ahead, sir. So it can be in the vicinity of 2,000 crores. Can it be even higher?
No, it should be in the vicinity of 2,000 plus minus, depending upon the market scenario.
Okay, got it. So 2,000 crores, that's going to be a big improvement from around the 1,250 crores that you delivered in the last year. That's point number one. The other positive is you've generated a lot of, of cash in the past quarter as well. And you've gone ahead and reduced the debt in your books, which is also encouraging. I look at your consolidated net debt. The consol number has come down from ballpark around 1,500 crores, closer to around 1,000 crores. So give us two numbers. What is the capex plan you have lined up for this year? And what happens to the net debt? Further reduction by the end of this fiscal?
Yeah, we have capex plan of about 750 crores to 1,000 crores during the current year, depending upon how do we get the approvals and how fast we move on the approval side, because most of our capexes are on the mining side.
And so what happens to your net debt?
Net debt should come down drastically. I think if everything goes in line what we have planned, it should be below 500 crores.
Okay, so around 750 crores of capex and your net debt halves even from these levels. That's pretty good.
Yes.
Now, before we get to the company specific details, are you seeing some softness on ground in terms of demand? Obviously, there's been a seasonality factor that is playing out, but is it softer than normal monsoons or is it par for the course?
Generally, in the monsoon season, the demand for steel remains a little soft, but it does not materially affect to the secondary sector suppliers. If you consider overall demand, the secondary steel suppliers percentage is very low, so we don't face any problem on the demand side. Yes, prices remain under pressure during the monsoon season.
Got it. Let's talk about pricing then. For pellets as well as, if I look at your ferroalloys, there was some kind of stability, some improvement in quarter one. For quarter two in comparison to quarter one, how are prices shaped up? Tell us particularly about pellets, ferroalloys as well.
Yeah, pellet prices have moved up recently. All the steel products prices, including sponge iron, pellet, everything has moved up by 1,000 rupees to 2,000 rupees, depending upon the product to product. Pellet has moved up to 10,000 rupees now, from our average realization of 9,600 in the quarter one.
Okay, all right. Now on SKS Power, you have said that the asset is good and the infrastructure that you have can potentially help you all in doubling your capacity. When do you take a call on this front? Currently, it is, I think, around 600 megawatt. You have two units. So when do you take the call on the next 600 megawatt? And what's the ballpark number we should work with? I recall when Mr. Kamal Sarda joined in on the show, he was saying roughly, I think, in the vicinity of close to around 4,000 crores, if I remember correctly. Should that be a rough number we work with? And by when do you all take a call? Sometime in this year?
Our present capacity is 600 megawatt. What you stated is correct. And we had given figures of 4,000 crores for 600 megawatt.
Yes.
Now we are evaluating whether to go for 600 megawatt or a little higher capacity, maybe 800 megawatt or so. So capex will slightly change accordingly, and we are evaluating both the options, what capacity we should put up. All the basic infrastructure, land and basic infrastructure are already available, as already stated. And we are going ahead with the necessary approvals, because we have to get all the environmental approvals and all other approvals. So it will take some time to go ahead with the project. Before that, we have to get the approvals.
So ballpark around, I think, 6.5 crores per megawatt. That should be the rough capex, right?
Yeah.
All right. So that will be approximately. So we should look at a capex, and if you're looking at 800 megawatt, closer to around 5,000 crores.
Yeah, 5,000 crore plus. Because with the time changes, the cost may also escalate, as it will take another at least 1.5 to 2 years to get all the necessary approval.
Okay. So this is the story then that will get announced. The capex announcement itself could be sometime in FY27, and then from there it will take another 2 years to come into play. Is that correct?
Yeah, capex announcement will also take time, because before that we have to have all the approvals in place.
All right. So and this 800 megawatt, once you take the take the call on whether or not to go ahead with the capex, then it should by FY29 it should be up and running. Will that be a fair estimate?
I think it should take around 2.5 to 3 years to complete the project.
All right. So it will take a little longer, and
Because
post
presently there are timelines for delivery are little longer. By that time, if there are changes in the delivery schedule, that may be a different thing.
So you did
We are
around
yet to finalize the capacity. We are yet to finalize the capacity, whether to go for 600 megawatt or 800 megawatt. That is being evaluated.
So directionally, last year you did around 1,250 crores of EBITDA. This year you're saying you'll do around 2,000 crores. With the capex that you all are planning, I think a smaller capex will be on the metal and mining side and a bigger capex on the power side. By FY30, you should be at an EBITDA of around 4,000 crores.
It will be far-fetched to speak on any figures for 2030. But yes, as we are continuously investing, that is a fact. We are investing about 750 crores, 2,000 crores every year based on the present capex plans. And in addition to that, we have larger plan for the thermal power project of IPP. So continuously we are investing, and it should move up definitely.
All right. Final question before we let you go. The big question is funding. Having a plan is great. 5,000 crores. You're going to be throwing up a lot of cash. So what will the funding mix look like? Will it be debt and internal accruals? Or since the equity markets are really appreciating the numbers that you've given, will you look at raising some equity?
As of now, we don't foresee any requirement for raising equity, at least for the plant projects. Yes, in addition to that, if we get any other opportunity, that is a different aspect. But for what we have planned, I don't foresee any requirement for raising equity.
Got it. Appreciate you joining in, Mr. Jain. The street clearly liked the numbers, and you've given us some impressive guidance for this year itself. So 2,000 crores of EBITDA. Net debt comes down from around 1,000 to around 500 crores. And the big call is on SKS Power that currently has 600 megawatt of capacity. You could potentially be adding 600 to around 800 megawatt. Congratulations on the past quarter's numbers, Mr. Jain. And we look forward to having a chat with you as the year progresses. Okay, let's get in Mayuresh Joshi, then Director Research at MarketSmith India, who joins in. Hi, Mayuresh. Good morning. Good to see you in early morning. Tell us, Sarda Energy, any view on this name? 20% yesterday, locked in upper circuit.
Morning, Nigel. No, I think great set of numbers. And if you probably look at the management commentary and construct, they're probably assuming that energy will become their core vertical as we head into the next few quarters. Obviously, I think the thermal assets that they've got, roughly 760 odd megawatt, the renewable assets that they've got, primarily out of the hydel assets that they're building in, including the Sikkim hydel power plant. I think that has significant amount of EBITDA margins, and even the tariff realizations for hydro projects have got significantly higher, backed with sufficient amount of PPAs. So our own sense is that with the kind of cash flows that they are generating, the value additions that is happening outside pellets. So obviously the management just mentioned that pellet prices are moving northwards. But if you look at sponge iron realizations, if you look at the billet realizations, you look at ferromanganese, silicomanganese realizations as well. Steady state, the ferromanganese around 70,300 odd, silicomanganese around 72,000 odd. So I think if these realizations remain steady state, along with the integrated operation that Sarda probably has, both in terms of its coal mines, and again, I think the SKS Power acquisition, which is also backed with coal mines at Gare Palma 17, I think that clearly adds in terms of superior market performance getting reflected on their energy vertical. So as for the management say, I think if they're able to probably replicate this performance and energy taking center stage as we head into the next few quarters, numbers will still show significant improvement. Obviously, I think the only risk factor remains how pellet prices move, how demand probably comes through. But because of their captive consumptions and integrated operations, I think a large part of this is well shielded. So a great set of numbers. I think on our ratings and rankings at Markets with India, I think it looks positively promising. So we remain optimistic.
Well, I remember, in 2024, when they actually backed this asset, Mr. Kamal Sarda, who's the promoter, he made a very, very rare appearance here on CNBC-TV18, one of the only appearances in the last 15 years or so. And he said, this is going to be a game changer. And it appears now those benefits are flowing through. And that's why the street, they're positively surprised by those numbers that did come out, because SKS Power has transformed the company from just being a metal company to a more, a non-steel, non-metal kind of company. So more structured, and cash flows as well can be predicted. So street likes it.
Mayuresh, as a house, are you recommending buying Indent Bank? That's the big stock in focus, big change. Rajiv Anand in the helm. He's a seasoned banker. He'll instill confidence. And at the end of the day, Indent Bank is still about 45% away from its 52-week high. So, what's the house call on Indent Bank at these levels?
I think that's an announcement that the street will probably write, Reena. Good morning to you as well. But what really transpires is what is the change in numbers that one really expects. Now, one really assumes and presumes that the worst in terms of reporting because of all the issues that they were facing is largely behind them. And it's always going to be a task in terms of reconstruct of the balance sheet. Now, the hope here is that there will be improvement in every passing quarter as we come through with a clean slate that the new management will now begin with. But I think how these numbers will stack up is going to be important. The second aspect, obviously, from a valuation perspective, absolutely attractive as we speak. But again, I think there has to be some element of confidence that the street will probably need in terms of reported numbers going forward and the base building quarters that probably happen over the next few quarters. So at this point of time, I think we're probably neutral onto the stock. We still continue to prefer a stock like an ICICI Bank among the large names.
Okay, ICICI Bank, he is the man in charge, man and at the helm. And of course, you heard it right here on CNBC TV18. Ritu Singh breaking that story several days ago. Mayuresh, hi, good morning. So, in a nutshell, I think the sense that one's getting, and I've been looking at notes from this morning, Citi had a call yesterday, Motilal, and there was also Goldman Sachs, we spoke to them as well. Consensus seems to be that, yes, Q1 is muted, but it's not a total washout. We spoke of Sarda just now. Anything else, that meets your buying criteria or has moved up into your buying category looking at the Q1 performance?
Morning, Sulbi. So, again, I think there were a whole host of numbers that were relatively good as we speak, as far as Q1 is concerned, whether it's large caps or mid caps. So selectively across sectors, I think within the auto names, as I mentioned earlier as well, I think Hyundai is something that we continue preferring. Our own sense is that numbers were decent. The kind of market share gains that Hyundai has probably done because of all the product mix and the launches that they've probably done. Whether it's Creta, whether it's Exter, when you're talking about the EV platform, the export mix that they've probably got, even in the current context, the capacity expansion that they're probably doing from 8,24,000, they're expected to go up to 10,74,000 units. The margin performance, which has been relatively decent. And yet, amidst competition, our own sense is that the kind of market share gains and stability that the stock is probably exhibiting makes it a very strong case. So this is one stock from the auto space that we continue backing. Obviously, I think agrochemicals as a space is something that we've continued liking at Markets in India for a long, long time. And our sense is that with better monsoons, farm gate prices, which are relatively decent, benign input costs, the expectations of strong volume growth led with better pricing and relatively benign input costs, the operating leverage should play out very effectively. And therefore, stocks like a Coromandel, stocks like a Deepak is something that we continue backing at Markets with India. Obviously mentioned ICICI Bank within the large cap names, which continues to remain in focus. Obviously, I think the NIM compression has been there for the industry as a whole. But I think with a lag effect, I think as lending rates also start coming back in tandem, I think somewhere the NIMs probably should start becoming far more stable and relatively better growth expected in the next few quarters. Hospitals as a space within healthcare is something that we continue preferring. And largely, I think within the consumption basket, I think selective FMCG names, Marico is something that we continue liking. We're obviously looking at how Britannia will post its numbers. But I think consumption as a story, which includes FMCG, apparel makers, I think those can make a very strong comeback in the second.
What about Godfrey Phillips? Not good for health, but those numbers look quite good. And the commentary that came in from Philip Morris as well was fairly impressive, with regard to India business. So they gave a bit of a hint. And now, as Mangalam told us, the numbers are quite good. And it appears they are gaining market share over the last few quarters. Your take?
No two ways about it. And obviously, I think the inelasticity in terms of demand, as far as the core cigarette business is concerned, obviously continues, Nigel. So to that extent, I think the numbers, whether it's Godfrey Phillips or whether it's the core cigarette business for ITC, I think those are going to be cash cows for both these companies. However, our own sense is that it's a tad bit too much, specifically in the case of Godfrey Phillips. And therefore, I think we still continue preferring the other basket of stocks, as I mentioned, within the FMCG names, or something even within the alcohol beverages space. Radico has posted a brilliant set of numbers, in my opinion. Even this space selectively should continue to.
Okay. All right, Mayuresh, we'll leave it on that note for today. Thank you very much for joining in. We look forward to a conversation again soon. Do have to take a break, but we'll come back on the other side. We'll have, of course, almost 9 o'clock, so we'll have the pre-open rates coming in. Our technical experts also joining in, Mitesh Thakkar and Sudarshan Sukhani, with today's trading setup. Welcome back. Just about 5 minutes and we'll get our pre-open rates. Let's get the implied open up. So 57 points lower. That's what the indication is. Let's get to our trading experts. Sudarshan and Mitesh are with us. Gentlemen, good morning. Bulls got a breather yesterday. Now the question is whether you should take any index trades, thinking that this will continue, that pullback that we had yesterday, or whether you should be shorting bounces. Let's ask both of them. Mitesh, morning. What's your call?
Good morning, Surabhi. I was talking about the fact that index could be broadly in a bigger range of 24,550 to about 25,250. We kind of bounced back from the lower end of the range. On Friday, we got a low of 24,535, and yesterday started some kind of a bounce back. While the gift nifty is slightly negative, I still believe that it could be a situation where in the market after opening slightly lower could still edge higher. The first midpoint pivot is around 24,950. So the initial range for me right now is about 400 points, 24,550 to about 24,950. If we start getting past that, then I look at even a test of 25,250, but that should be it. We on the weekly and the medium-term indicators, volatility, and the volatility indicators are very flat, which means that a directional movement may not happen, but it could be a broad consolidation.
Okay, all right. Good morning, gentlemen. Sudarshan, coming across to you. What's your call?
Yeah, good morning. See, the Nifty made some kind of a low on Friday, but that doesn't mean that the rally has started. Yesterday could be a relief rally. My view is that it is best to leave the Nifty alone. And the best scenario would be that the Nifty chops around 100, 200 points up, 100, 200 points down till it builds a base. Because 24,500 has some kind of stability. Now, once that happens, there is a buying opportunity that may emerge, but that's a lot of ifs. For today, the Nifty is an avoid, focus on stocks.
Let's get to the stocks then. What do you have on your radar, Sudarshan? Give us some stock trades.
Well, that's an all-buy list, mainly because, stocks keep on rotating and keep on doing good things. Bajaj Finance is a buy with a stop under 868. I'm probably getting that number wrong. Bajaj Finance is a buy. We'll just keep it there. DLF is a buy with a stop under 780. CG Power, which was on news yesterday, is a buying opportunity with a stop under 650. And Tube Investments, TI India, is a buy with a stop under 2840. It's an all-buy list for mid-caps.
All right, all-buy list coming in there from Sudarshan. Mitesh, what do you have on your radar?
I have more of buy calls as well. Very clearly, this market is, while it's consolidating, stocks are giving you good trading opportunities. So 3 buys to a sell. On the buying side is Grasim with a stop at 2750 for targets for around 2860. Buy on Eicher Motors had a good pricing volume breakout yesterday. So buy here with a stop at about 5580 for a target of 5700. Conditional buy on JSW Energy. If it crosses 540, buy with a stop at 529 for targets of 565, and one sell, Apollo Hospitals, that's a sell with a stop at 7380 for targets of around 7150.
Okay, all right, gentlemen, got that. Thank you very much for joining in. We'll come back to you a little closer to market opening. Right now, I have to take a quick break. Come back on the other side with the pre-opening rates. And then we get chatting with Bazaar Divanji, someone who's a veteran who's watched the banking landscape of the country for so many decades. What does the arrival of Mr. Rajiv Anand mean for Indent Bank? Welcome back. We are getting the first pre-open rates now. Nifty is down 180 points, but it'll settle. It looks a lot more than what the sensex is doing at this point. Let's pull up the first rate on Indent Bank. 10%. Now, I don't know if it'll be a 10% circuit up or not, but the first rate is showing the kind of optimism, enthusiasm, belief, and maybe even relief that the market is sensing, given that such a big veteran from the banking sector is coming over to take charge. Speaking of that, let's straight away get to that story. First, over to Gaurav. We're missing Ritu in action. She's in transit and she'll come back and tell us more about her big news break. But in the meantime, Gaurav, you tell us, I mean, he's taking over, taking charge at a time when I think the numbers that we just saw, Indus's numbers, 1 quarter back, I mean, year on year, obviously, it's still a tall order, right? But there's hope that at least the book will be recovered. But you tell us more as Mr. Rajiv Anand takes charge.
Well, yes, as you rightly said, there is a cloud of uncertainty definitely on Indent Bank, but this is definitely a positive move for the bank because now Rajiv Anand will be taking over as MD and CEO. This will be from 25th of August, and with this, we also confirm our news break. We exclusively told that he will be one of the front runners in the Indent Bank MD and CEO. When we look at his portfolio and his performance, he has been in the industry for the last over 35 years and he has a very strong track record. He was a founding MD and CEO of Axis Asset Management. He was also appointed as Deputy Managing Director of Axis Bank in December 2021, where he handled wholesale banking business and also was responsible for driving the digital agenda for the bank. When we look at the performance and his track record, it also makes him as one of the very preferred candidates for Indent Bank, and that is what something the market is also penciling in and taking it in a positive way. When we look at the other headwinds, it still remains in terms of the operational updates because the ROA is still at around 0.5%. So there will be it will be interesting to see how it will move towards that 1% mark and how he will lead that towards 1% mark. In fact, brokerages are also being a little positive now because with Jefferies, they are saying that recognition of this reorganization of the top management is actually a key initial step. They will be watching out on other joiners from other banks. And at the same time, Citi also mentioned that the key monitorables include strategic roadmap, execution capabilities, and also turnaround in terms of core profitability. So definitely positive sentimental move from brokerages as well. And on that, we will be watching out on Indent Bank today.
Oh, absolutely. And you know what? The stock is still up 10% in the pre-open. The Nifty is settled now. The cut is only 65 points, but that stock, Indent Bank, is still mirroring. So, yeah, Nifty had opened big gap down, but now it's settled to a more modest 57-point cut. But this seems to be the expectation. Yeah, 7% now on Indent Bank. That's what we are getting. Let's see. Bazaar Divanji, founder of NeoStrat Advisors, is with us to give us a sense of what this means. Is this a turnaround moment for the bank or not? Perhaps too early to call. But Bazaar, great to have you on. Thanks for taking this quick call in the morning. I mean, would you say that he was perhaps among the best candidates? And it's a tall task ahead, right? There's a Ministry of Corporate Affairs probe that just opened. There's the SEBI investigation in terms of not front running, in terms of insider trading. And then the ongoing, investigations from the RBI on the derivative accounting, microfinance issues, etc. Your thoughts?
Yeah, no, first of all, yes, he's a very good candidate. And as has been said, his track record is great. But we've seen this copybook play out, right? We've seen it in Yes Bank, we saw it in RBL, we're now seeing it in Indus. I think the biggest challenge he would have is clearly balancing growth and credibility, creating the trust organization. And it's a pity that even today, it's a key man which kind of drives sentiment. The key man should not drive the sentiment. The trust organization should drive the sentiment. And I think that's what he would strive to achieve over his time. Also, there are probes. You talked about some ROA issues. The ROA issues in Indus actually seem to be one-time adjustments. This is not a systemic lower profitability game. So once the adjustments are taken care of, I think there will be a good adjusted ROA to work on. But he needs to build a trust organization going forward.
You have in the past spoken about, what we've seen at Indent Bank. The consequence of that is that trust has become a collateral damage. So just to get back to the point, Abizar, about balancing growth and bringing in trust, the governance, the controls, do you think he will be able to deliver growth in the next 12 to 18 months as he does begin the process of repair and recovery? What is your own view?
I think it's an imperative. I think it's an imperative that he will generate growth. First good part is that we've got somebody who has delivered growth in the past and somebody who's delivered growth with the right balance of governance. So in that sense, yes, I think he has the track record to do it, and I think he should do it. The risk, of course, always remains that you err or focus too much on the side of governance and kind of compromise growth. I don't think that is a desired approach, and I think knowing Rajiv from the past, I don't think he will do that. So I think we should see reasonable growth in the next 12 months.
Yeah, Abizar, I completely take your point. And I think with, what Mr. Anand brings to the table and what he's known for, scaling up the retail operations at Axis as well, I don't think growth is at all going to be, something that the market will have a question on. But with respect to the ongoing probes, because we don't have till now from the bank any comprehensive statement on what happened to the forensic audit, what is happening with RBI. Our colleague Timsy from Delhi was reporting that the MCA is looking at its own investigation as well. So would this still be an overhang? What would you expect over the coming few weeks and quarters?
This is part of any turnaround story. There is legacy attached. You deal with the legacy. Just that the people dealing with the legacy will be far more credible. And hence the agencies or anybody else investigating would keep the issues behind, I guess, deal with the problems. Of course, we had Yes Bank also where people had to deal with legacy problems. So you deal with the legacy problems, but at the end of the day, the credibility of the trust organization will make sure that these are dealt with better than what the legacy organization could have dealt with.
And Abizar, so then coming back to the point on growth, in terms of just strategy, putting the problems behind, in terms of strategy and pivots, and focus areas, would you expect any immediate pivots? Not immediate, but near-term pivots, say on a particular segment, not corporate, but retail or not wholesale, pull back from microfinance. Would you expect that in year one at all?
So, I think that the retail story sometimes has been overplayed and is too crowded a market. I think the mid-corporate and the medium to mid-corporate story is where India needs to find a niche, and we need actually a bank which focuses on that secured lending in the medium to I would not say small, the medium to large segment. And that's where I think if the focus is the ability to grow India would be phenomenal. And then, of course, there are other segments like project finance. I think it's something which the banking sector has not delivered up to. And if there is an ability to get to some of those large ticket things, I think there will be a marked change. The bank has to identify what their niche is going to be and then play to that.
Do you expect a lot of churn taking place at the leadership level? Some more exits following him from Axis or even from the other banks? And how will that impact?
The good part is that, some of the churn in IndusInd has already happened. So there are good vacant positions. So I think the leeway and the flexibility for him to do something in terms of getting the right kind of people is clearly there. So, we hope that he will get the good team in place.
Okay. All right, Abizar, appreciate you joining in and giving us your take on Indent and how do you see things pan out. Wishing you a good day ahead. So Abizar mentioned about Yes Bank, Indent Bank now is out of the way. I think the other big stock that we'll be looking at in August itself is RBL Bank. Whether or not there is some of that news with regard to fund infusion, someone coming and taking a stake. The stock has been showing signs, it's been holding in that vicinity of from 260 to 270. I'll keep an eye out on that stock. Even in yesterday's trading session, it was one of the stronger stocks. So let's see whether or not there is some news in the offing in the month of August.
Nigel, just wanted to point out one thing, which people, will of course remember, that Indent Bank right now, I think is up 2% or so in pre-open. But from the lows, when the crisis hit, the stock had fallen to about 650 odd. From there, it's rallied 25% to 820, anticipating a turnaround and cleanup. So now I guess from here onwards, it'll have to be, some more inputs that we get on these ongoing investigations, on some, some clarity on the strategy, perhaps, that could take things higher. But for now, I think 15, 16 rupees at the start.
Well, that's right. Well, let's get straight to Sudarshan. Then he's joining to give us his 9-10 call. Sudarshan?
Yeah. It's DLF. Buy DLF with a stop under 780.
Okay, DLF, that's the one that Sudarshan is backing. Mitesh, what about you?
Yeah, I'll go with a buy on Grasim for targets of 28.62.
Thanks a lot for that, Mitesh. So Grasim and DLF are the two stocks that Mitesh and Sudarshan have for us. But let's hop across to Nimesh. He's here with the standard brokerage report of the day. Morning, Nimesh.
Morning, Nigel. So today's standard is on power OEMs. A big report from UBS. They've initiated coverage on 4 names, which is BHEL, Waaree, Premier, and Suzlon. And they've also raised the target price on Thermax now to 5,100. So these are the 5 stocks in focus. I'll talk about the 4 ICs, which is first one is BHEL. So UBS has initiated a buy with a target price of 340. They believe that rising thermal demand would mean that the net profit for BHEL can go up by 8 times by FY28 estimate. So that's the first stock, which is BHEL. The second name is on Premier Energy. Again, an initiating buy. There they have a target price of 1340. Now for Premier, they believe that the company has been ahead of the peers in terms of integrated expansion. So companies backward, a 10 gigawatt of backward integration would mean a nearly 34-35% revenue and EBITDA CAGR over the 3 years between FY25 to FY28. So that's on Premier. The third stock is Waaree Engineering. Again, initiating buy. There they have a target price of 4,400. And for Waaree, UBS believes that the company can have a healthy 620 basis points of EBITDA margin expansion over the next 3 years between FY25 to FY28. So that's a big number on Waaree as well. And the last one is on Suzlon. Again, initiating buy, target price of 78. And on Suzlon, they believe that the sector tailwind as well as the competitive edge would mean a big earnings expansion. Even for Suzlon, UBS is expecting almost 40 to 45% of revenue and EBITDA CAGR over the next 4 years. So big initiating report on 4 names and a big target upgrade on Thermax as well.
Thank you very much for that. Vamakshi is also joining in for Siemens Energy. Vamakshi.
Well, Rima, good set coming in from this company. Remember that it was demerged from Siemens and houses the energy business. The revenue saw an uptick of almost 20%. The EBITDA margins have also expanded substantially by 470 odd basis points, and the net profit is up almost 80%. So good operational performance coming in along with very strong revenue growth. And largely, this revenue growth is being driven by the power transmission segment. It's seen an uptick of almost 35%. The power generation segment, though, has grown, but at a much slower pace at almost 6% year on year. Largely, the expansion that we're seeing in the margins is also being driven by the power transmission segment itself. It's up almost 855 basis points for the power transmission segment. Now, the ordering activity, as far as that is concerned, new orders came in at around 3,300 odd crores. This is a massive uptick. The order inflows have nearly doubled on a year-on-year basis, and this is being driven by several large orders. Now, in addition to all of this, the company has announced a capex plan of around 280 crores. This will be in a phased manner, and they will be expanding capacity of high voltage switchgear products at their Aurangabad plant. So overall, it seems like a good set of numbers. Capex plans also bode well for the company. We also have a note coming in from Jefferies. They have a buy call, target price of 3,500. They say that Q3 for the company was very strong. Q3 because Siemens Energy follows a September year ended calendar. They're expecting the company to see 50% EPS CAGR from over the next couple of years, and this will be driven by robust power capex pipeline as well as operating leverage linked market margin accretion. So positive commentary from brokerages as well.
Okay, and the stock's holding up really well in the pre-open session, Vamakshi. Thank you for that. 4% higher. The other one that's doing well in this session is Godfrey Phillips. Mangalam, remember, just told us smoking hot. Indeed, both ITC and Godfrey, I mean, they've done really well in terms of cigarette volumes, but both companies have faced pressure on margins because of cigarette or tobacco leaf inflation, rather. So that's what we've got. Godfrey is up about 5% as we speak. Markets, I mean, entirely flat. It hasn't picked up on the positive cues either from Wall Street or from Asia. So the start is muted, but let's see if there can be some sense of momentum built up as the day progresses. Right now, we don't have too much of an indication. Watch for the banks, because like yesterday, ICICI Bank and HDFC Bank both are slightly nervous ahead of the RBI policy announcement. Bank Nifty is also a little subdued. Indent Bank, of course, is charting its own path with a gain of 2%. It's not that 10% pop that we had in the pre-open. Now it has settled to about a 2% gain. So the question is, can the bulls prevail once again? Can they continue to build on yesterday's pullback? Well, looks like it's going to be a quiet start, and then we'll have to take it as it comes. Counting down to the open, and here we go. So the Nifty about 22 points lower, 30 lower, 39 lower, 40 lower. So it's a lower start, you'd have to say. Mid-cap index is doing better. It's absolutely flat. Bank Nifty also actually doing better for what it's worth. Bank Nifty actually flashed a little bit of green just now. Apart from Indocent, SBI is the other big one. While the private sector large banking names have been struggling yesterday and this morning, SBI is trying to offer a counterweight. The market's still down about 20-odd points. Seems to be some selling in large cap IT and Reliance as well. We'll see how it goes, but it's a very quiet start to begin with, guys.
Well, Indent Bank is your top gainer. It's not a blockbuster move. It's a sedate 1% gain. But that's the top mover right now on the back of Rajiv Anand's appointment as the CEO. 1.5% up on Indent Bank. The other notable mover is Bharti Airtel. Remember, it reports numbers later today. Numbers come out post-market hours. Airtel Africa, which is about a quarter of the company's overall valuation and numbers, came out with a very good set of numbers led by tariff hikes in Nigeria. Bharti Airtel's India mobile business performance will be tracked very closely. Coal India, Jio Financial, Ultratech Cement, Eternal, NTPC, these are some of the stocks on the gainers list. On the way down, you've got some large cap IT names struggling a bit. So Infosys, Wipro, TCS down between 0.5% to 1%. M&M is down nearly 1%. You've got HUL, which is correcting after the big up moves, and lots of brokerages came through. Stock did well, but now it's seeing a bit of a profit booking. Axis Bank is weak in trade. And you've got Reliance Industries struggling. All in all, it's a very weak. It's a sluggish start, very lackluster. You've got a little bit of a red coming through on the Nifty and the Sensex. Banks are underperforming a bit.
Well, I think a bit of a pause for breath after the kind of run that we saw yesterday is par for the course. We need to take out higher levels, and then in fact you'll feel a little bit more confident. But let's focus on a few stocks that are buzzing around. Oswald Pumps, I think they came out with a set of numbers. The street likes it. That stock is reacting positively. AB Capital and Sarda Energy, both of them, they had a good run yesterday. They're seeing some kind of follow-through buying today. So both of them initially, volumes are pretty okay. And both those two stocks were up. Oswald Pumps, yeah, that's reacting to its numbers. The other couple of stocks that are doing well is Sanofi. Pull up that stock, that's buzzing away. And Godfrey Phillips as well, as Mangalam told us, is smoking hot. I recall when Philip Morris came out with its set of numbers as well, we said the read-through could be that Godfrey Phillips could have yet again outperformed what the market did. And that seems to be the case. So that's opened up, gap up 6% higher. PSP Projects. Yesterday we had highlighted the stock was down close to around 18% in pre-open. And there could possibly be a large trade in the offing. Well, in the second half of trade yesterday, we did see that the Adani Group went ahead and picked up that chunk in the stock. For the time being, the stock opens up with a gain of close to around 5% now that that large trade is out of the way. What's not doing well? Triveni Turbines reacting negatively to its numbers. So that stock is lower. TBO Tech, that's the other one that's reacting negatively to its numbers. And Bosch as well is down close to around 2.5%. Keep in mind, Bosch in the last 3 months has seen a very, very big run. It's coming for some profit taking in today's trading session. And because of this tariff worries and the talk surrounding it, we have a stock like Gokuldas Exports that continues to reel under pressure. I think Gokuldas Exports, Welspun Living, because of the kind of exposure that they have to the United States. India's talking tough, and rightly so. But it seems that these guys who have a high amount of their exports out there, these stocks are a little under the weather today. But Indent Bank now is building on the gains, holding with a gain of around 2.5%.
Looking good. We should pull up Gokuldas. That's the stock that Nigel was just talking about. Some of these textile makers, exporter stocks, they're under pressure because of the kind of rhetoric that we've seen overnight as well. And by the way, on the gaining side, look at New India Assurance, 4% gain coming through on that one. Teamly is about 3%. So it's a little here and there. But otherwise, the market is largely flat to begin with.
Is also one more stock you should watch. Down straight away 7% lower, very large volumes. Again, here it's an earnings miss. Revenues were down about 20%.
Absolutely. So a lot of individual counters in focus on the back of either news or earnings. Overall, market remains range-bound this Tuesday morning. Let's welcome in our next guest on the show. We have Sameer Arora of Helios joining in. Sameer, great to have you on. Long time, haven't spoken to you. I like the frames, new frames, I think. So wonderful.
I've been roaming around India and the world, so yeah.
Oh, okay. A new perspective, with looking at things with a new set of eyes, as they say, right? But I don't know. Are you finding anything new? I mean, we'll talk about Trump and tariffs and all that rhetoric in a bit. But let's talk earnings first, because I've been looking at a lot of notes in the last 24 hours. And the general sense when you read these sell-side notes is, itna bhi kharab nahi hai, Q1. But you tell us, what's your assessment?
Actually, the thing is that if you keep looking at the old companies, then kafi kharab hai. But there are so many interesting companies, and you know the ones we own, all of them had massive results, like massive growth at least. And in a environment where growth is very limited otherwise, you need at least 10-15% of your portfolio, maybe even 20% in 5-6 stocks, which are, you know, you are looking forward every day to what they will do in 2 years and 3 years, instead of saying that, you know, some company has guided for 1 to 3%. Now it is making it 2 to 3%. That kind of boring things you can handle only up to a point. So actually, if you look at the entire menu of choices, there were many companies that have done well, but in aggregate, it is nothing great, but it's not bad. It's like 9-10% type of, I mean, aggregate earnings growth, which is okay for now, for if it is, as long as it's for 1 or 2 quarters only.
So where does that leave the market then? I mean, again, I'm just leaving aside the whole tariff issue, but with these kind of earnings and the cuts so far for full year are just about 1%. Most brokerages have cut by 1.2, not more than that. So where does that leave us in terms of market valuation? Any upsides or no?
So the upside isn't that you'll get 10%. If you see the big pools of earnings, so IT is growing maybe 3-5%. Large consumer is excited if they grow 5%. And the large banks are growing 8-10%. And after 1 or 2 quarters, they may grow 12-14%. So as of now, the aggregate earnings growth is 9-10%. Therefore, it would be reasonable to think that over the next 2-3 quarters, or at least till the end of the year, you're only supposed to make another 5-6%, which is 1% per month kind of return will be great. I mean, it won't come every month. What I mean is, you can't say today that we are in an environment of 20% growth, market appreciation. But hopefully next year, by the time interest rates come through and there is some government action on something to do with consumer, a little bit more, and in any case, because of monsoon or because of interest rates feeding through, the consumer sector also does better. Otherwise, we are looking for our consumer stocks which grow very high, but the aggregate numbers, of course, for India are quite limited.
Samir, hi, Rima here. So you're in India right now?
No, I was. Now
you were in India. Okay. So I'm guessing you must have spent a lot of time on ground. You must have met companies, investors. I mean, what were your big takeaways and what is the shift in the sentiment or tone compared to your last India visit?
By the way, I come every month, so that is not a big deal for me in that sense.
Right.
But
then the first part of the question.
The way I present it to people and to clients, distributors, and even internationally is that you will make very below average return, like 10-12% or 10%, but it has to be compared with alternative, which is the interest rate. So if the government bond is giving only 6 point some percent, which say 9-10 years ago was giving 9%, so you are supposed to make a spread of 5-6% kind of range. So don't look at it in absolute that, oh my God, previously the market used to grow, earnings used to grow 14-15%, but now only 10-12%. Also for now, because the inflation is low, the nominal growth is low. And to the foreign investor, we say that you were broadly making at the market level, we used to outperform, but and still do hopefully. But at the market level, you are making 14% type and losing 3-4% on currency. Now you may make 11-12% and hopefully not lose much on currency. So in the end, everybody's happy and they move on by focusing also on the alternative and not just looking at the nominal number, which is lower than we have seen in the past.
Hi, Samir. Good morning. Good to see you. When I thought Surbhi will ask you about Trump, because he's been making a lot of noise. You'll just completely ignore it. Yesterday, I think what was trending since the cricket game as well as Trump were trending, people are talking about whether or not he made a couple of calls to the bowlers and said, I got it done. Thank you so much for your attention, But that was on a lighter note. But what do you make of Trump's commentary?
So the first thing is that, in some macro sense, somewhere there is some angle. It might be geopolitics angle, which might lead to some problem or something that who's your friend, who's your enemy, are you in this camp, that camp. But from an economy point of view, because the exports to US are so low, and particularly from the stock market, other than these two textile companies or one which, I mean, we also own Gokuldas and all. Okay, these guys will fall or what to do. But broadly, we won't even know exactly which stock to feel negative on from this angle. But look at the positive that today, one of our other companies, Paytm, has sold some whatever 4,000 crores of stock led by two American banks, Goldman and Citi, which I assume broadly means that the investors will also largely be foreign and maybe American. So today, if we find, I hope we do, that the number of investors or a large thing was bought by US investors, that would be like a positive thing to say, that even practically nobody is overly reacting to that. Either assuming that this is limited because of our economy and the weight of exports or share of exports, or that this is not going to stay for long.
Samir, this morning in your typical style, you have tweeted on Indent Bank, Bajaj Finance and PNB Housing Finance. Now, where Mr. Anup Saha joins PNB Housing or not, that time will tell. But do you think the
stock?
Yeah, that's what I want to ask you. Do you think the stock has overreacted to Mr. Girish Kaushik moving on? Is it providing a good entry opportunity because it's lost 20%, in a matter of 3 sessions, I think?
Well, people say we are not supposed to talk about stocks, but broadly we know that no CEO is worth that much. But, if it turns out that he's joining the private equity guys who sold the stock, that would be hugely negative, and I would also be very angry with those private equity guys. But if it turns out he's left for another job, now what can you do? But if in all these cases where you find that the management is good, but on their leaving, if the stocks fall 20%, then you have to take a new view that the management is not good, that they did not, hand over that company fairly and squarely to the management. They did not deal with succession planning, or they made it more volatile by leaving, because your responsibility does not end on the day you just leave suddenly, particularly if you leave suddenly. So, but anyway, as of now, 20% looks a bit too much, I agree.
But, forget about the stock for a second, Samir. I have to thank you. I thanked you online as well. Thank you for the humor. I just could not stop laughing after reading that tweet. No one puts it like you do.
Which one?
The same tweet, the same post we're talking about. Yeah.
So many tweets, I don't know.
That's also true. That's also true. No, but we're talking about the one that's on our screen, talking about these big ticket management changes at large financial organizations. Let's see. So we have the answer on Indent now. We have to wait by and see the answer on PNB Housing. But on Indent and larger question on banks, Samir, one, we have the policy coming up. So, you tell us on financials if you're changing anything, retaining your stance. And specifically, do you think that this is going to be a case of buying a turnaround story? People love to buy turnaround stories in this market. Problem is, half the time those stories don't work out. So what do you think?
We also buy many turnaround stories, from Paytm to Zomato to delivery to whatever, to fintech also. But this one I am not buying right now, because, we have seen when there are these legal cases, one is just a results and growth, and one day they're becoming earnings and all that. But here there are, you've seen how cases come up 1 year later and 6 months later. And this is a bit more complicated. Plus in financials and in banks, we already have our exposure. Plus these things don't grow that highly, that at that higher rate that you think that you are fascinated by the fact that something in the economy, or not economy, but in habits of people is changing. So this is like a regular this thing. So I am not buying that.
So you're circumspect, and I completely understand where that comes from. This is exactly what we were discussing with Abhizir Divanji just a while back, that from this forensic audit to MCA to RBI to SEBI, there are too many pending inquiries.
And they drag for years, or 1 year, 6 months, whatever. Plus in this, we have enough exposure in this sector, so we don't need to try.
Got that point. Just to go back to the Trump issue that Nigel highlighted, I want to get your overall sense on this. Till now, when we were talking about why FPI flows are not coming. So first, they were not coming because the US market was doing too well. Then they were not coming because India earnings are maybe pedestrian, some will argue. Then they were going to South Korea. Is this going to become another reason? If there is this, cold tonality between India and US, will it make foreign investors more nervous?
By the way, foreign flows are coming from Feb 1. If you see in aggregate from February 1, the flows are positive. This month they were negative for two reasons, I think. One was the Trump tweets or whatever, and second was the results did disappoint a few people if you looked at them individually. But otherwise, because of the big picture thesis of the entire world and also mine, that the world is diversifying away from US in terms of their equity exposure. Currently, the MSCI world, the US weight is very high, maybe some 68, 70%. And everybody seems to be feeling that although US as market is doing well, but for different reasons, maybe because of currency, because of otherwise, the world is looking at non-US also. One reason may be that for the first time in many years, the MSCI World ex-US is beating the US market in pure performance. You can see that in the nervousness about dollar and the appreciation of gold and these books like Ray Dalio's book on how countries go broke, that there is some nervousness, maybe there is anger, maybe there is frustration towards US. So there is some X%, small bit, large bit, some move away from US, which for the rest of the world then becomes proportionately very high. Means if 3-4% leave US out of 70 or whatever, that for the 30% weight is a 10% increase. So in that, India has a story. You can be 1 day behind, 1 month behind. If China gets more than 1 day, you will get because you are part of that emerging market. But even otherwise, if you call primary plus secondary together, India is getting flows since Feb. The real selling happened in September 24 and in Jan 25, which was together in 2 months, something like 22 billion. But after that, it's not been in your face selling.
Got that. So Samir, one sector in India which you think is overhyped, and one sector where you think perhaps consensus may be getting it wrong and it could be a little under-owned, undervalued.
So overhyped, I've always said these new businesses are normally overhyped. I have read many books on this, particularly the solar theme. They might be great for India. We need it for climate, but for investment, these things never work. And even IT is still overhyped. Even today, people say that the valuations have reached long-term average. If you have reached long-term average, that means there were periods when it was below average. And what were those periods and why today should be a period which should be below average considering the uncertainty in US, the fact that companies are themselves admitting there is firing, that companies are not in aggregate hiring people while in the same city, some GCCs are hiring in massive numbers. There is a disruption going on. But because we have in the past seen great returns, nobody's willing to give up so easily. So that hope has to be, I think, brought down a little. In terms of another one, I think overhyped is the stock market related stocks, which is the exchanges, the depositories, the brokers, because we know that the government intent is to bring it down. We know that people have lost money. So beyond a point, we see that in the participation in the accounts of all these guys who come up every day and disclose how many active accounts, everything is falling. And we know broadly that if people lose money, then sometime or the other, they will drop out of this. And this has happened in Korea in the past where there was some frantic this thing in the olden days and then suddenly it disappeared one by one. And in a few years, you became a normal this thing. It's also a macroeconomic issue. I saw the interview of, Ashish Gupta of Axis with Lata saying that it is more than a stock market issue. It's a macroeconomic issue. I believe he was saying that it is 5-6% of India's savings that the F&O traders are losing every year, which is a big number. And most of it is going abroad. So that makes it even worse. By the way, it neutralizes the entire tax cut that was given by in the budget, which was, say, 1 lakh crore. And broadly, the public has lost 1 lakh crore. And not only they have lost, if they had given it to some other Indian or to me, I would have spent it in India. They have given it to guys who have taken it out of the country story over. So now they want another tax cut or a GST cut so that they can give it to Dream 11 or give it to F&O. It is not a stock market issue. It's a macroeconomic issue. And it, one way or the other, has to be brought down.
Okay, and just one more, the other part of the question. Any sector which, according to you, is grossly undervalued in India?
I don't know about grossly undervalued.
Little undervalued.
But the thing is, people are more cynical about the new age companies, not realizing what change is happening. So the change is that these are the only few stocks, because they're not sectors, where we are not relying on end growth of consumer or end growth of insurance or end growth of logistics, but the shift in your either, if it's a retail thing, in your personal preference in buying from route one or the other, in buying online instead of from agent, or buying through quick commerce instead of going to your store or whatever. And these things can go on forever because these things are early in the game. The businesses where you have to rely that India's growth will go from 6.5% to 7.5%, those things will take time and you need many more things to fall in place. But the cynicism is, and that's why, I don't even own a lot if you see the portfolios. But just to irritate the system is so much fun via Twitter that I enjoy both the returns and the irritation I provide.
Oh gosh, and in these new age businesses, at least the Paytm bet, like you said, I mean, things seem to be improving, at least the numbers seem to be improving.
Everybody is improving. All of them
Paytm. And even Eternal for that matter.
Old age. You see, we are young people, so we relate to these new businesses.
Absolutely.
With Paytm, Samir is also enjoying print chart with, that was the other one he put out on Twitter.
Absolutely. But okay, to sum it up, Samir, before we let you go, so what you're saying is expect 5-6% return for the rest of this year, which is 1% return per month, which is too less by Indian investors, expectations. We're used to bull markets.
Tell them sorry.
Tell them sorry. What about if the RBI comes in and obliges with another, 25, 50 basis points this year? Do you see the bulls charging again, or is it just 1% per month?
No, this year, okay, but not now. Because if they do, then my bank's earnings will fall a little bit more for now. Because as they cut, it makes it, you need another 3-6 months to get everything in place. By the way, I have one more quick suggestion that what India should do. I thought about it in the morning, that we have to follow the Mark Zuckerberg policy. So what is our strategy? His strategy is, I will hire these individual guys from different companies in AI and make my own company. I think India should target 10 US companies and target them in the sense, bring them to India, bring Tesla to India, bring Disney to India, bring Harvard University to India, give them 200 million, 500 million.
Tesla is already in India and Disney.
No, not that. For opening one BKC, that is not India. Tell them open, we give you 500 million, give Disney 500 million open. Basically make the American companies invest in India while the Americans...
bring them to India like that.
Okay. The Americans want Indians to invest in America or the world to invest. You call Harvard University and say, we give you 250 million. Open a campus, you call Universal Studio, you call New York Public Library, give them 200 million, come and open 6. I mean, do something big with only $4-5 billion, but focused on deliberately US.
You think they can stand up to Mr. Trump? Maybe that's a debate for another time. They'll get a call saying, what are you doing, Mark?
No, if they don't want
like he called him Mr. Tim Cook.
Then you can call Oxford University. First you try US. I mean, what I mean is, you have to change that discussion.
Yeah.
And it won't be a lot. Maybe $500 million on 10 companies, $5 billion. What's the big deal? And obviously you won't give it outright. It'll be based on you spend 80%, we'll give you 20%. But basically, somehow make a list. Just like Zuckerberg made a list of employees who has to target. And he targeted them and then some of them agreed. You also target X number of companies.
Think big. Yeah. Absolutely. Think big always.
And focus.
Okay. All right, Samir, good to have you on the show as always. And congratulations to you, Alok, Dinshaw, as well as the team on the outperformance with regard to the Flexi Cap Fund. And look forward to having a drink with all of you all towards the end of the year. Hopefully it ends on a high.
In the meantime, you can invest SIP.
For 1% per month. Got that.
Got that, Samir. Look forward to meeting you and chatting up with you. Thanks a lot for joining in. Well, let's focus on a corporate then. Shree Cement, the numbers look quite disappointing. The volume degrowth is something the street didn't like. We have Neeraj Akhoury, the managing director at Shree Cement, who joins in on the show. Hi, Mr. Akhoury. Thanks a lot for joining in and speaking to us here at CNBC-TV18. Tell us about this volume degrowth. The last time around you joined it, you told us the focus is on profitability rather than on chasing volumes. And that's the way it's played out even this time around. But now the degrowth for the first quarter is 7%. Earlier, you were talking about a mild 3% volume growth for the year. Does that hold?
Good morning, Nigel. I think we have to see it from both ways, Nigel. One is that in terms of prices, we have grown by about 9% YOY, or even in terms of EBITDA per ton, we have grown by roughly about 45%. It has been a very conscious strategy that we have been following, which we call value over volumes. A part of that strategy is now playing out. We are seeing that at this new price positioning, also our volumes are stabilizing. So I would strongly argue that the strategy which we have adopted is the right one to take the company in the future.
Right. That's the strategy that you have adopted, and maybe it could bear fruit as well. Yeah. But what is the guidance from here on? Earlier, you were guiding for ballpark close to 3% volume growth for the year and 6% realization growth, which meant that the revenue growth would be close to around 9%. Maybe you stick to the 9% revenue growth. You can clarify on that, but maybe you change both these two, variables.
No, we will stick to the same numbers, Nigel. In fact, on volumes, we would see now, in our view, we should be growing about 4 to 5% on the annual basis, around those numbers. And other numbers, what we have said is what we will be planning to achieve in the year.
So 4 to 5% volume growth still you're guiding for after seeing a 7% decline in the first quarter. So then you have to make up, big time. What does it do in terms of your profitability?
That we have taken this study for the last 6 months. Yeah. Now it is playing out. Now our acceptability at the new price positioning is gaining ground. We are seeing the volumes in the key counters returning back. So with all that in having around, we believe that a 4 to 5% volume growth is the right number to look at.
So 4 to 5% volume growth, your revenue growth will be ballpark close to around 9%.
Yeah.
And you believe that volumes will make up from here on. What about your EBITDA per ton? That's something that you held on to. You said you'll be in that vicinity of around 1,400 rupees per ton. Absolutely. Even though you degrew, you still managed that number, which is commendable because you didn't have operating leverage that's playing out.
Yeah.
For the year, 1,350 to 1,400 rupees per ton, you can hold on to?
Absolutely. So I think 1,350 to 1,400 is the right number for the full year that we should be able to deliver.
And you think this, you would have clearly lost market share in the first quarter because of the strategy that you've adopted. Lower volumes, the industry grew in, mid to low single digits while you degrew. So there would be some market share lost. According to you, what is your current market share? And will you recoup the market share you had in the past?
So let us see how the future plays out, Nigel. But we were at about 8%, and I think that we should be able to retain that. We are coming up with some new capacities. We have already commissioned some, and about 6 odd million tons of new capacity in India, and about 3 million ton in UAE is still coming up now. So market share in India, we should be able to maintain for the full year.
Got it. Are you interested in Deccan Cement, Mr. Kuri? One part of the street says that Mr. Bangur and team, they go and see a lot of assets, but they're not being very aggressive. They're just participating. They're not pushing hard. Deccan Cement, that's the last one that we have heard that it could potentially be on the block. Have you looked at that asset? Is there any interest? And even JP Cement, the last time around you said you will focus more on organic growth. These two assets, do they fit the bill? Will you look at that?
As I have always said, we will rather grow through organic routes. And if you look at the last 2 years, 3 years, our growth is organically is about at 35%, much higher than the industry growth numbers in the same period. Acquisition, we are interested, but we have to get the right value and the right strategic fit. Otherwise, we will continue to focus on our organic growth route.
Okay, Mr. Parth Jindal as well yesterday at the press conference said he rather do it organically, but he said, I'm not going to tell you all how much I'm adding capacity at because then our competitors will know, how low the capex spend is for them. So that aside, we'll have to see how that pans out. Now, the UAE operations, that's always been a drag, but this time around, it's turned around very, very well. Impressive showing. What changed so much for them? And now you're getting confidence, you're going ahead and adding capacity. Has there been change in sentiment? Is there some kind of reason that these numbers are looking so good?
So we had done a huge amount of changes in UAE, be it in our operating methods, in our management, in our approach to market. All that has worked out very well, Nigel, for the last 1.5 years, 2 years now. And that is why we are seeing the results. UAE performance now is exemplary in our mind. It's extremely good. And we are seeing that with the kind of products that we are offering, the market demand is there. And therefore, a capacity growth plan has been initiated.
So these numbers are sustainable, you think?
I think so. I believe so. And I'm convinced about it.
Okay, all right. What about the cash in your books? The last time around, you all were thinking about how to reward your shareholders. You know, I think a few years ago, you all were getting peak multiples. The street was very, very happy. Now they believe that maybe the aggression is not there. Though you all have focused a lot on pricing, and that's paying rich dividends. Is there a buyback in the offing? Is there a one-time special dividend? Because your cash balance would be what? Close to 6,000 crores or thereabouts?
About 7,000 crores, yeah.
7,000 crores. So something for the shareholders, maybe a small buyback.
So, I really can't comment on this. This is a board decision. We will take it at the appropriate time. At this moment, as I said, we are fully focused on how do we reach our 80 billion ton capacity additions, capacity in the next 2 years. We are already exploring many more sites where we will start work this year. So, for the time, I think we are more convinced about investing that money to grow the company to 80 million tons.
Okay, all right. So, you know, both these two assets you're confirming you're not interested in, right? JP as well as Deccan Cement.
I would not say I'm not interested. I have never made that comment. I would continue to say, Nigel, that Shri will like to evaluate every opportunity.
And where will you be most keen, sir? Where will you be most keen? Because there will be probably a large conglomerate going by what we saw with Holcim. Probably Heidelberg at some point of time comes to the market because of what the global parent has decided. And that could be strategic in nature in central India.
Very speculative, Nigel. So I would not like to comment on that. Heidelberg is a strong player and they are doing well in India. I am not aware of any such strategy that they have taken of exiting India. I'm not aware of it. But for now, I would fully focus our entire efforts on how to grow organically. And as and when opportunities come, of course, we're going to evaluate them.
Okay, all right. You know, going by what the parents' commentary is with regard to emission, and where they want to head, probably the cement assets, in India will be something that we'll have to look forward to. But let's see how that goes. For the time being, we'll take your commentary on the organic growth plan. The growth of close to around 4 to 5% in terms of volumes, holding on to your market share of around 8% and a EBITDA per ton in that vicinity of around 1,350 to around 1,400 rupees. Thanks a lot, Mr. Ukuri, for joining in and giving us all of those details. Wishing you a good quarter ahead and we look forward to chatting up with you. For the time being, we'll slip into a short break. On the other side, we'll have the international trade expert, Abhijit Das, and the former finance secretary, Subhash Chandra Garg, who will be joining in to talk about Trump's tariff threat on India.
Welcome back. Now decisively lower. It's 24,600 in the Nifty. We opened flat, but now we've lost close to about 0.5%. DLF is the top Nifty loser. The bookings numbers were good. 44% jump in Q1, but the stock is slipping. BEL, Adani Enterprises, IT stocks taking it on the chin. Infosys losses more than about 1%, and Reliance Industries too is quite weak in trade. But the big story is US President Donald Trump took to Truth Social last evening and he said, "We will substantially raise tariffs on India over its purchases of Russian oil." Following the US president's tariff threat, India has issued a strong response, a very strong response. Parikshit is now joining in with more on this. Parikshit.
The Indian government has tried to set the record straight with the US. They've gone on to say that the actions being taken by the US administration and the European Union against India for purchase of Russian oil are absolutely unjustified and unreasonable. And India will continue to take all measures necessary to safeguard national interest and also economic security. India has tried to remind the Trump administration that we started buying Russian oil after the war began because traditional supplies were being diverted to Europe. Secondly, the Biden administration at that time had encouraged India to go ahead and buy oil at the price cap because it was necessary for strengthening global stability in crude prices. Remember, there were no sanctions on India at that time for the purchase of Russian oil at the price cap that had been decided by US and European countries. Indian imports are necessity compelled by global market situation. That's the word coming in from the Ministry of External Affairs. The government has also said that it's very revealing that the very countries who are criticizing India right now and taking action against India for buying Russian oil and energy are themselves indulging in trade with Russia. For example, European Union imports of energy in 2024 had reached a record 16.5 million tons. US continues to import uranium, hexafluoride, palladium, fertilizers, and chemicals from Russia as well. So India is trying to set the record straight before a domestic audience, but it's also extending an olive branch to the US by saying that we are buying more oil and gas from the US. In fact, crude oil imports from the US are likely to go up by 150% year on year in FY26 itself. The trade negotiators will be talking later this month, but the word coming in from industry bodies and experts is that there is a need to dial down the rhetoric. It is important to have some clever diplomacy on the table and look for ways to save and protect this long-term strategic partnership, which is very critical for India.
Thank you very much for that. We're now joined by former Finance Secretary Subhash Chandra Garg. We also have with us Abhijit Das, international trade expert and former head of Center for WTO Studies. Gentlemen, thank you very much for joining in. Mr. Das, let me begin with you and the latest heat that we're feeling from Donald Trump. In the past, you've said that, this is Trump being Trump. His aggressive rhetoric should not be taken seriously in a way. But now it's just increasingly getting more and more provocative. What are your latest thoughts?
Thank you for having me on your show. Trump being Trump, as I said earlier, he will try to use the big stick in terms of tariff threats to extract as much of concessions as possible. He has already struck almost one-sided, hopelessly skewed deals in his favor with European Union, with Indonesia, with Japan, and a few other countries. He's trying the same trick with India, and it is to the credit of the government that so far we have stood very firm. Showing any weakness in front of the threats being shown by Trump could have consequences not only in the agriculture sector, but could have implications for access to affordable medicine, could have implications for our digital future, could have adverse consequences for even for sectors such as MSMEs through meeting demands of the US on government procurement. In a nutshell, Trump is using the tariff threat for extracting one-sided concessions, for trying to make sure that the policies in various countries, including India, are aligned, are changed to do just one thing: promote the economic and commercial interests of the United States. So that's where we are.
Mr. Das, Mr. Garg, good to have you on. Let me bring in Mr. Garg into the conversation as well. And sir, I just kept reading and rereading the lines yesterday, the MEA statement. It was quite telling, till now, and it's been, 3-4 months. We've just maintained stoic silence, or not really engaged with any of the rhetoric. But yesterday was a very clear and very specific call out in terms of what the EU is buying from Russia, what the US itself is buying from Russia. So where does this leave the hope for some sort of a trade breakthrough? This looks like a bit of a logjam. Your interpretation, sir.
So you issue a statement bringing out the fallacy or the that United States, EU, all are doing business with Russia, and they're asking us not to do it. Now, that contradiction, etc., is aimed at what? It's aimed at telling the United States that don't try to fool us. Let us be clear about you are doing business. Let's also do business. Is that the intent, or is that the intent is that all right, now we have seen through your game, and we'll also not be any longer looking at the kind of deal which we have been trying for the last 3-4 months. So I don't know what exactly is the message being sent, but in my judgment, Trump, everybody now knows, is not only transactional, but he negotiates on the moment. That in this particular moment, what does he want? A couple of months back, he was against Ukraine in favor of Russia. Today, he has turned completely against Russia and is in favor of Ukraine. So that is something. It's very difficult. So to do a deal with a mercurial person like him, he has his objective, and unfortunately for the world, he has succeeded in wielding this tariff bludgeon in such a way that he has got what he wanted to get. Most of the world has given in to his ask. So whether it's EU, Japan, Indonesia, Vietnam, etc. So I think he sees today that tariff is a very, very good weapon in his hand. And he can make the recalcitrants like India also to fall in line by saying that 25% is one, but I'll put you under much more of a penalty kind of thing. So I think you can't have a negotiation under such a situation. It's like a storm. When some storm hits you, you don't do a deal with the storm. You try to weather it out. You try to see that it passes through, and your damage are limited. So in my judgment, what is today needed is that we should sort of call this bluff out of this tariff threat.
Yeah.
Let us look at our interests. We have $85 billion kind of export to them. 40 is exempt in any case, the electronics and other things which have a different trajectory. It's about $40 billion of the trade which is at risk of the tariff. In my judgment, if you don't offer any concession to United States on this, even if there is a 10, 15, 20% kind of loss, I think we'll be able to call this bluff out of the tariffs. That is the way to go rather than trying to find a deal with.
Mr. Garg, that point is taken. Don't chase a deal with the US given the unpredictability and the mercurial nature. But while India's overall share might be low in US trade, there are certain sectors where the cost of inaction will hurt them greatly. So it may be $40 billion overall, but it's restricted to certain sectors like textiles, for instance, gems and jewelries. So isn't that going to greatly hurt these sectors if we don't do anything and strike a deal? They may get impacted severely.
If you do a deal, let us say you accept 25% tariffs on textiles, it wipes out all your profits, all your margins. Then what are you gaining out of that export? So if you are, let us say, making 15% and you reduce your prices by 25%, what is that export worth? If that reality is recognized, and so this will tell you very clearly that in this situation, that if you're faced with 25% tariff, it doesn't make sense to export to textile to America. So what do? Suppose you have some surplus left and Americans don't accept. Then you either use that for our factories to use that in the domestic market, or take it elsewhere where there is no this 25% kind of thing.
No, absolutely. But sir, the counter to that would be coming in obviously from the specific segments that get impacted. And I think the textile folks have already reached out saying that they want some help with duty drawbacks, etc. And then there's a question of penalty. So 25% plus, we don't know what penalty he's thinking of. Let me quickly go back to Mr. Das for the final word on this. Mr. Das, the issue seems to be that we're stuck at multiple fronts. I mean, this is not just about line-by-line tariff negotiations at all, right? I mean, there's market access issue. They want to bring in GM crops. Then there is the Russian oil issue. So do you see any scope of a middle ground?
Honestly, a middle ground does not exist because Trump does not believe in a middle ground. Trump believes only in his own ground and he doesn't want to concede anything to the other party. So in all likelihood, any deal which we might end up striking with Trump could be hopelessly tilted against our interests. And let's not forget that these tariffs, which are illegal from the WTO perspective, are also being challenged in the US courts. So should we be conceding huge ground, giving concessions just out of fear that Trump will block our exports through these illegal tariffs when at a subsequent date, let's say a few months down the line, these tariffs have to be withdrawn by Trump because they are illegal? I think at this juncture, prudence suggests that we hold on. We should not be making unilateral concessions. We should not be. We should not get cowed down by the tariff threat. We may have to endure a bit of pain, but in the long term, enduring that pain works better in national interest than giving concessions which Trump is demanding of us.
Yeah, absolutely. That's a point well made and well taken as well. So perhaps India, one of the few countries that actually hasn't, quote-unquote, bent the knee, as what the EU is being called out for, and plenty of local opposition there for the deal that they've done. Thank you very much for the perspective that you've shared with us this morning. Appreciate you joining in. Well, with that, let's quickly get back to the market which could not really sustain with the opening gains at all. I mean, we are practically giving back, I think, 70% of yesterday's rally. 110 points lower on the Nifty now. Mitesh is back with us, and Mitesh has been cautious about yesterday's rebound as well. Mitesh, what now? What's the call? Index and stocks?
I've been talking about the Bank Nifty. Now, the Bank Nifty is just around yesterday's low, 55,437. And today we are at 55,470. So about 30 odd points away from yesterday's low. I think in that bridge, you could see some pressure on the Bank Nifty. Disclaimer, we have some put spreads over here. So there is already a negative position which I've taken. But I do expect, once 55,400 goes, there could be about 500, 600 point kind of decline on the Bank Nifty. And with that, I have a sell on HDFC Bank. That's a key component of Bank Nifty, and it's turning slightly weak, after making new highs and showing first signs of profit booking. So sell here with a stop just above levels of 1995 and look for a target in the range of about 1945, 1950 to begin with, and maybe even lower. And the second stock which I have, that's on the buy side. AB Capital yesterday had a big breakout bar. Today is giving a mild pullback. So if you get it around 274, 273, take long positions with a stop below 268 and look for a target of 285.
Thank you very much for that. Let's get to some stocks which are on the move. Godfrey Phillips is zooming on the back of a very strong Q1 performance. More than a 30% top-line growth. Manglam joins in with the fine print.
Well, it's a 37% top-line growth that Godfrey Phillips has showcased in the first quarter. And for perspective, ITC on a much larger base obviously showed cigarette revenue growth coming in at 7%. For the last 13 or 14 quarters, if I remember correctly, Godfrey has been outpacing ITC. And prior to that as well, barring 3-4 quarters, it has actually steadily continued to gain market share. Now, ITC obviously saw a margin decline as well, and Godfrey wasn't any different. So EBITDA for them grew at 25% at a time when the revenue grew by around 38%, and as a result of which margins came down from 25 to 22.7%. The street doesn't worry about that because a 38% revenue growth and them gaining market share definitely has the street excited. And the net profit, despite margins compressing, actually grew over 25% as well. 285 crore turned into 356 crores. The additional kicker that came in was the company announced a bonus of 2:1. So that's another thing that is leading the stock higher as we speak. Good numbers, bonus, and also them gaining market share.
Well, that's right, Mangla. And when Philip Morris came out with their set of numbers, actually it was very disappointing from Philip Morris's perspective. But their commentary on India was quite good, which hinted that maybe, in fact, these numbers could be a little bit better. And as we speak, the stock is racing away till around a 10% gain. I recall on Bazaar morning call itself, we had made this point that Godfrey Phillips, the read-through from Philip Morris actually was positive. The stock is reacting in a positive manner. Indent Bank, that's the top Nifty gainer. Let's revisit the news of the appointment of Rajiv Anand as the MD. Gaurav joins us to tell us more. Gaurav?
Well, yes, Rajiv Anand will be taking over a position of MD and CEO in Indent Bank from August of 25. Now, RBI has given an approval for the appointment of Mr. Rajiv Anand as MD and CEO. And remember, CNBC-TV18 was the first one to break in this story that Rajiv Anand can be a front-running candidate for Indent Bank CEO and MD. When we look at the track performance for Mr. Rajiv Anand, it has been strong. He has been in the industry for over 35 years. And before joining Indent Bank, he was Deputy Managing Director for Axis Bank. He was also handling wholesale business banking there. And he was also one of the key person who was responsible for the digital banking there. In fact, he was also one of the founding MDs for Axis Asset Management in 2009 for 4 years. So definitely a strong track record is where he is coming from. And given the fact that he has a strong track record and experience of handling a bank which is bigger than Indent Bank, it is actually cheering up the market. In fact, this all started on 29th of April when Mr. Sumant Katpalia, who was MD and CEO, resigned from Indent Bank, and from there, in the 3 months itself, we are seeing this turnaround happening in the MD and CEO position. When we look at the overall uncertainties, now they still remain, but one part of the uncertainties is actually going away because of the appointment of MD and CEO. And this is what the brokerages are also penciling in. Now, Jeffries is saying is that the reorganization of the top management is one of the key things, which is key initial steps. But from here on, they will be watching out from any other joiners from Axis Bank or any other bank. In fact, Citi is also saying that from here on, there will be key things to watch out for, which includes strategic roadmap, execution capabilities, and ability to turn around the operating profit. Now, remember, ROA has been below 1% for Indent Bank, which is one of the cause of worry for investors, and that is the reason why we will be watching out on how the ROAs will turn around from here on. But definitely, as of now, good news is that Rajiv Anand is joining in, and as a result, we are also seeing stock is also cheering in day to day.
Thank you very much for that. We had a new listing today. Aditya Infotech, its market cap post the surge is about 7,900 crore, and it's had a fantastic debut, 50% up right now. It had raised about 1,300 crore rupees. Subscription was 106 times. Look at that, 51%. It's a company which manufactures surveillance products and services and systems, so your at-home IoT, CCTVs, etc. Good debut. Get into a break. On the other side, Manisha will join in to talk about commodities.
Welcome back. Let's talk about the commodity markets now. We have Manisha joining in with the latest. Manisha, what's on your radar?
Well, I'm looking at gold after very many days, Surbhi, and that is because with all these geopolitical concerns and tariff issues, inflation, we've seen gold prices actually come stronger yet again. Overnight was above $3,400 an ounce. We've seen 1.5% of gains come in for the gold prices. Silver as well gained up by more than 1% overnight. Gold actually with that 1.5% has been the biggest one-day decline in 2 months that we've seen gold prices to perform here. Remember, for the months of April, May, June, even July for that matter, gold has been holding above $3,300 an ounce. Every dip is getting bought into. For the Indian markets, I mean, look at that. We're trading at a 1 lakh rupees, 10 grams yet again. We did see prices decline down to 96,000 as well. But yesterday was an all-time high in the New York session for the Indian markets. And we seem to be holding that magical number of 1 lakh rupees for the Indian markets, even at this point in time. Well, it has to do with the weak US jobs data. That has weighed onto the dollar index. The jobs data came in less than what the street was anticipating, less than what we saw in the previous couple of months as well. And the last 2 months also revised down is something that has seen that money flowing back in case of gold there. Also, with those numbers, the markets are now pricing in an 80% chance of a rate cut for the month of September. Well, the probability mills also tell you that 60 basis points of a rate cut is what, by this end of this year, is what markets seem to be pricing in. Markets as well as gold for that matter, and is the reason you're looking at that support coming in for the markets there. The US also had unveiled tariffs between 10 to 41%. That takes effect from 7th of August. Ahead of that, there's a lot of conversation coming in from banks and brokerages, revising their gold forecast on the higher side for this year and the next as well. Also seems to be really supporting the markets. The global banks also have expressed concerns over near-term US growth, inflation outlook. Some of them have been talking about recession fears as well. Again, supportive there. And then it has to do with the Fed statements as well. San Francisco Fed president says that time for rate cut is approaching. Markets took cues from that. And then you also have Governor Adriana Kugler's resignation, where the markets believe that it gives President Trump chance to nominate replacement of his choice, are some of the things that the markets really seem to be reading. Citi was the only one, as we've been telling you, which have come in with bearish sentiment in case of gold prices, but they have revised it on the higher side now. In the next 3 months, Citi believes that prices can go to 3,500, 3,600, 3,800 is also what they're anticipating. In focus now for you to watch out going forward is going to be the June trade data, ISM PMI report numbers from US, and that is where the US dollar and gold will take cues from.
Okay, all right, got it, Manisha. Thank you very much. Well, on that note, we do have to take a very quick break, but when we come back, Lata is going to be in conversation with Goldman Sachs economists Santanu Sengupta and B. Prasanna of ICICI Bank on what the RBI could do in the policy tomorrow.